Hi, welcome all. I'm Gautam from MG Wealth Day Trading. So today we are going to cover the topic basics of volume profile. So this is a little disclaimer. So basics of volume profile. So today we are going to cover the topic under the volume profile is so basically the volume profile. So before getting into the volume profile, we need to understand the price action. So how the price moves, why the price is moving. So what actually uh, moves the price, and the volume and the price action areas, and why is the volume is so important in this market, and the volume profile and the basic volume profile shapes, and some of our trading strategies. Okay, let's get into it. So this is a little introduction of our concern. So we are a full-time trader. So we basically focus. So we are the full-time trader. We basically focused on all the market movements based on the news, data, and the other market opening timings. So we tested all the strategies, auto trading strategies, algorithms, but it didn't give any satisfaction and didn't get any constant profit. Sorry. It really took 12 to 15 hours a day, and nothing really helped for a long run. So some strategies give the profit today, tomorrow, but the day after tomorrow the strategies won't give the profit. So it did not give any constant profit, and not a successful trade. So finally we get into got rid of all the indicators and focusing on simple price action movement. So after getting into the simple price action movement, we get to know that the volume is very important in this market. So then we started combining the price action and the volume profile, and afterwards we see some constant edge and the constant regular successful trade in our trading. Okay, so let's get into the price action. So what is price action? So price action means understanding the market or understanding the chart without any indicators. So without any indicators, just the price movement with analyzing and understanding and learning the price movement. So this is the price action. So we don't look for any specific or any candlestick formation alone. So for example, if the price action theory or a price action topic is a sentence, then candlestick formation is a single word in the sentence. So without the single word, the sentence won't be meaningful. So candlestick formation is also an important one, but the candlestick formation alone won't give the price action result. Then the price movement. The price movement is always a continuous flow of price based on time and volume. So it is always dynamic in nature. Okay. So why the price moves? Everybody has this question. So this is very curiosity. This is a very important one. Why the price is moving? Everyone thinks that because there is a more buyer, there are more buyers than sellers, and the reverse one, there are more sellers and buyers. Then it is totally wrong one. We also thought this is the reason why the price is moving, but afterwards we came to know that it is a total wrong concept, and this is the common mistake everyone is doing, and all the experts, advisors in television articles, everyone is saying there are more buyers sellers, so the price is going up, but it is wrong. So what truly matters is the aggression of the buyers, aggression of the sellers. So little example, if the price goes up, there are more aggressive buyers and weak sellers. We don't say there is no sellers. We are saying there is more aggressive buyers and weak sellers. That is the concept. So aggressive buyers or sellers with their aggressive market orders drive the price up or down. So we can see the price is shooting up, shooting down. This is because the aggressive market orders are being placed inside. Okay. So, and then the price action and volume. So everybody knows the market is dominated, is always dominated, moved and manipulated by the big institutions and big financial groups, FIIs and DIIs. So they manipulate the market, and we are retail investors. We are very small, and we cannot manipulate that huge amount of volume. So we are very small, but still we can be profitable by accepting our role in this market. Our role is to keep an eye on this big institution or the big players who are investing, who are moving the manipulating the market. And then the price action. So for that our role, we need price action and volume. So this price action and volume gives the clue about what they are doing right now, and most likely what is going to happen in the future. So this price action and volume helps us in predicting the what the big institutions are doing. Okay, there are three main price action areas. One is the sideways, aggressive price action areas, and the strong rejection areas. So let's see one by one. So the sideways price action area means the price trading within the range for a day, or for the 2 days or 3 days, for the week, or it may go for 10 days itself also. So let's see, this is the range where the price is trading inside this range. So this is the sideways price action area. In this sideways price action area, the big institutions are accumulating their position. They might go for a long position, they might go for a short position, we don't know. We come to know that they are going the long position after the end of the sideways price action area. So this sideways price action area will become a support and resistance for the future trading levels. And then the aggressive price action area. After the sideways price action area, the market will go on trending in one side. So we came to know the big institutions have taken the long position after this sideways action area. So after accumulating the position, trending the market with aggressive market orders. So they trend the market on one side. Okay. So next one is the strong rejection area. So this rejection might occur at higher highs or the lower lows of the trend. So this is most likely to be the trend reversal places. So you see here, this is the rejection place. So the price came down and rejected again. So this is the price rejection price from the opening of the market, and market came down and again retraces back and market fall off. So this is the strong rejection place. They have accumulated more volume at these places. Okay, so let's this is the whole bunch of three areas. So here it is a sideways market and the market fall off. So this is using the aggressive market orders, and the market retraces back to the sideways zone and rejected back. So this is the budget day, and market rejected back from the sideways region. So this is the whole price action trading strategy. So you can use this basic price action theory. You can inbuilt in your trading system. This also be a profitable itself. But in inbuilting the volume and the volume profile, the volume profile gives the exact price level where is the price is going to hit and reverse. So where the big institutions have manipulated the market. Okay, so let's get into the volume. So why the volume is more important? So volume is the one of the important information the market can give to us, and it is more efficient information and our data. So as I said already, the big institution manipulate the market. So they have the best experts, they have the best technology, they have the best algorithms, and they have lot of money. So having this so much of money is also a problem, because it is very hard to move this much of money unnoticed in the market. So if you are watching the chart, the price will be trading in sideways zone or in the range bounded market. So in this place, the big players have been accumulating their position. but they can't hide their volumes. The volumes will be visible. We can trace them using the volume profile. Okay, so the volume profile is available in the trading view. So in the trading view it will be looking like this, the fixed range volume profile. So you can use this tool and select it from anywhere and drag it, so you can see the volume profile. I will show you. So volume profile is not an indicator, it is a tool, like a horizontal line, vertical line, trend line. It is one of the tool. It gives the data, volume data. Okay, so normal standard indicators will show volume at a specific time period. So like this volume indicator down here, so this is a 15-minute chart and it gives the volume data for that 15-minute time interval only. But in the volume profile, it gives the volume at the specific price range. Okay, so we can get the specific price range volume and it can be used as a support and resistance for the future trading. Okay, in the volume profile, the more volume accumulated place gives the specific price range. Okay, in this, the wide profile means there is a heavy volume accumulator and the thin profile means there is a low volume accumulator. Okay, clear? And the next one is the point of control. So point of control is the wide profile zone. There is a heavy volume accumulated at this place. So this is most likely the price attraction level. So if the price is trading away from the point of control, most likely the price is again going to retrace back at POC. POC means point of control. So it is a very strong reference zone because the institution's interest lies on this place, because heavy volumes are traded at this place. So apart from POC, we look for other volume clusters. So there is a group of volume above the POC or below the POC or above or below the value areas. So this volume clusters also acts as a POC. Okay, so the basic logic is, if there is a big volume trader, the biggest wide profile, then there is a big players have traded in this place. So okay, keep in mind. So this is the volume profile, how it is looks in the trading view software. So this is our Nifty chart. So we have shown the Nifty chart only. So in this region is called the POC. So this red line shows the POC and this is value area high, value area low. Value area means in this whole profile region where the 70% of volume is traded is known as the value area. So this is the value area high, this is the value area low. So this is the POC and these two are the and we can add it this volume as well. So these are the volume clusters. These also act as a POC. Okay. So basic shapes in the volume profile. We have the D profile, P profile, B profile and thin profile. So D shape means it is a balanced one. P means bullish, B means bearish one. Thin profile means the market is trending in one side without any retracement. Okay. So let's see one by one. So D profile. D profile means, why it is named as D means the profile looks like a letter D, where the POC is nearby the center of the D. Okay, so in this the buyer and sellers are quiet and they are balanced. This is the sideways zone we have talked before in the price action. So in this place the big institutions are accumulating their position. Okay. So next one is a P profile. After accumulating there will be a aggressive trading. So in this, if the market goes up, so there are aggressive buyers and the profile will look like P. Okay, so the profile will look like a letter P. So this profile is called P profile and the market is in the uptrend. We can determine the market is in the uptrend when there is a profile looks like P. So the same in the B profile. When the market fall down, the market is in the downtrend. When there is aggressive sellers, the profile will look like a letter B. And the next one is the thin profile. So in this thin profile, the market will be trading on the one side without any big retracement. So it won't look like a letter P or D or B, but it will be looking like this. There will be a lot of volume clusters in this. Many small volume clusters will be. So it is a market one side traded one. So these volume clusters will act as a POC or a support and resistance zone. Okay. So this is the basic of the volume profile, and some of our trading strategies I am going to show you. So before getting into the trading strategies, so these are the these are the important points we maintain in our trading session. So we use 15-minute chart. So 15-minute chart will give us a good idea for the intraday trading, and 1 hour time frame for the swing trading. And we always look for a trend. We don't go against the trend. We look for the trend and follow the trend. Okay. And we wait for the price and we demand the price. So if the price is up, we don't go and take the buy over there. We wait for the price to retrace us back to our level and we place the orders at our levels. Okay. And one of the important indicator we have been using is average true range. We have got rid of all indicators, but this average true range is helpful while trading the volume profile, because this average true range is the value which is determined from the volume and the volatility of the market, okay, of that specific stock or a specific market. So using this ATR values, we put the stop loss or the exit prices of our trade. For example, if the Nifty is taken long or buy at 17,700, at that point the ATR value is 32.5, then our stop loss will be 32.5 into 2 multiplied by 2, and it will come almost 65 points. So the 65 points is our stop loss and 130 point is our target, double the stop loss. So 1:2 ratio. So we got many successful trade in this, and we are getting a regular successful trade in this volume profile strategy. So let's I will show you some of the screenshots. So this is the same Nifty chart, same P-type profile. So already shown the P-type profile now. So same P-type profile. After the P, the market opened a gap up and retraces back to our POC level. So the market rejected, the strong rejection happened here. So after the rejection candle, we have taken the long trade here. So at this point, the ATR value is 32.43. I have already said now. So like this only I have already said. So 32.43. So my stop loss will be 65 points and my target will be 130 points. So it is achieved. So again after 2 days the price retraces back to the same level and the strong rejection happened and the trade is going up. So this is the one of the example, and this is the B. In the B market after the B profile, the market gap down opened and retraces back, but it jumps above the POC, but it can't go above the volume cluster here. So it is acting like a POC, and the market rejected here and rejected here, market fall down. So this is the one of the example. So this is all the intraday trades. We are using the 15-minute time interval here. So this is the swing trading concept. So in the swing trading, we have used 1 hour chart. So the market is trending in one side. After trending, it is in the sideways zone. So by putting the profile for this zone, market retraces back to the POC and rejected, and it goes above the POC, and this volume cluster acts as a resistance zone, and we have taken the short trade here. So this is also we can use the ATR value. So the ATR value for the 1 hour, it will be more. It is 106. So we can take 107. So the stop loss will be 214 points and the target will be 400 points. So it is achieved here. Okay. So these are the basics of the volume profile. Always maintain the stop loss while you are trading, and trade safely. Okay. Thank you for watching our video, and all the best for your future trades. If you have any queries relating the volume profile, or if you want any elaborated videos like this one, or if you want any elaborated videos on this profile, if you have any doubts, kindly contact us or write in our comment section. Do like, comment, share and subscribe to our channel. Thank you for watching this video. Thank you.